Hello, Daniel here from InfoRest. Hope you're all doing well. So, we got some interesting movements today in the markets. We had the FOMC, the Fed rate cut happened today. It was as expected. You got the 25 basis point rate cut, bringing the range between 4 to 4.25%. And we also had some projections from the Fed. I'm going to try to pull it up here. Basically anticipating two more rate cuts this year and one more rate cut next year. So what has happened here? And what was the reaction from the markets and what could we expect going forward? Now, when we look at today's price action, right now you see in my screen, we're 5 minutes until the close. We've got a lot of choppiness in S&P 500, where we had initially a rally, but the rally got sold off quickly on the idea of that it was 100% priced in. So this was not, there's nothing to be shocked about this move here, that we got the sell-off right after, because it was fully priced in. The markets were expecting a 25 basis point rate cut, thus we got that move lower. But then later afterwards, during the press conference, we did get some buyback in the S&P 500, and we're basically now just in the middle of today's range. Now, we'll see what happens heading into the four as the markets have not closed yet. But this choppiness is typical, especially on an FOMC type of day. Now, when you look at the Nasdaq, you got the same scenario here with Nasdaq breaking out higher, more stronger than the S&P 500. We had Russell 2000 do extremely well and then completely reverse. We have Dow Jones, same thing, and now kind of in the middle there. So what do I take? How do I take this message of today with today's rate cut and with Powell coming out, commenting a couple of things? For example, mentioning that it's attentive on both sides of the dual mandate. Powell mentioning that we'll continue to monitor data, mentions that there's downside risks to employment have risen, jobs gains have slowed, unemployment have edged up, but still remains low. Mentions that inflation also moved up and remains somewhat elevated, right? So everything that you could really expect. Also, when we look at the projections, we also see that Powell, the FOMC, made the projections for GDP and the economy better than the previous numbers, the previous projections, and the previous in the previous FOMC meeting. We're seeing that. Let's see if I can pull it up here. So here it is, right? GDP much better than the previous June projection here, indicating stronger economy. Also, the unemployment rate staying the same and getting better in 2026. Inflation tad bit higher in 2026. Same thing with the PCE inflation, and then the rates being two more for this year and one next year, right? So what this signals from Powell is that it signals that we're gonna continue to see a strong economy coupled with the rate cuts. And whenever the markets cry or whenever things get political, Powell does bend the knee and gives markets what they want. And that's what we got. Now, in terms of price action, does this mean that, do we go up higher? Do we go down? Why is the S&P 500 acting like this? It should be rallying. Do we got rate cuts? What's going on? What the heck, right? What is this that we see here? Same thing with the Russell, although it is we're seeing positive numbers here in Russell and Dow, and negative numbers in the S&P and and NASDAQ. And that is because there's simply rotation happening here, where we had all the high flying stocks, and we had basically, if you look at Google, for example, right, just completely go on a tear, right? And Nvidia, right? Now we're seeing a pullback in Nvidia, but also same thing, right? A lot of these tech stocks, Tesla, right, just ripping also recently. Amazon has yet to break out higher. Meta has been. Apple is recovering, right? Netflix moving up higher and higher. So a lot of the FANG stocks just doing well and have been doing well. So we're getting some profit taking, especially in NASDAQ. When you look at the daily, we're quite at the top of the range, and we have overcrowdedness and positioning. So you can expect some sort of weakness around there. Versus the Russell 2000, you've got this double, triple top here, and people not being overly crowded on this market. You can still expect some buyers, dip buyers, to come in and push and test this triple top, and it wouldn't be surprising to see it move up higher. Same thing with Dow Jones, right? Breaking out higher. And S&P too. We're still not done on S&P. We can continue to see the S&P melt up higher and move up higher as rotation happens, right? Taking money out of the high flying stocks and allocating it to things like Russell, Dow Jones, and certain stocks in the S&P 500, the lagging ones, Apple being one of them, and other ones as well, right? So this is still expected in the equity markets, where we can continue to see the melt up happen, continue to see a move up higher, and the Fed just gave the green light of those rate cuts. Continue to support the market, even if he expects that the economy to be fine and to be better than expected, and to even still give the green lights that if we do get inflation, they're still going to cut. And with a new Fed chair coming next year, we could see more aggressive rate cuts. Now, the only question is when, does that become a problem if there's too much rate cuts, too many rate cuts, and it's because of maybe something related to the economy, or, is there something that's breaking? That we will know more later. As we get more economic data and from what we see in the actions in the bonds, right? The bonds, we did see strong performance in the bonds, but later sold off, all of them, right? Especially the long end pricing in more higher inflation. When we also look at the 3-month government bonds, right? We have yet to see more of a move here if there's anticipation of more rate cuts. But right now, this is just signaling that things are okay, things are fine, and we will continue to probably melt up, and maybe there's going to be dips until, and we'll continue to move up until maybe January of next year. Maybe things can end up looking very differently. The S&P 500 might be up here, 6,800, maybe 7,000, and who knows? Let's see. Maybe at that point, positioning will look different. Maybe people will chase. It will get overcrowded. Something might happen in the economy. Who knows? And then maybe we get a pullback. But for now, whether we get a pullback now, a small pullback, what I mean, in this week or next week, I do believe that will be bought back up, and we'll continue to see melt up continue and all-time highs in the equity markets. So anyways, if you like content like this, subscribe, hit the like button, bell icon to be notified of the next video. Also, in our private Discord chat room, we discuss more about these other markets here, like the bond market, currencies, gold, energies, and of course, the beloved Bitcoin. Anyways, good luck everyone, and I'll see you guys around. Cheers. Bye.